Hey everyone, this is James with Spectrum Global Financial,
And this is Crystal Jenkins with Remax Downtown.
and welcome to Real Home Talk.
Yes, where we dive into topics, trends, and hot button issues that impact the Florida homeowner and home seekers. And so today we have an awesome topic. And today's topic is about money being really tight.
Yes, and the good thing is, though, although money is in short supply, it's not going to prevent you from being a homeowner because there's actually programs out there to help supplement and make that dream of home ownership just a little bit more achievable.
Mhm. And our governor, Santos, started a government initiative for hometown heroes. And a lot of people been figuring out how they could get this program or learn more about this program. So we decided to bring in a specialist. Her name is Kathie Mewhorter. I think I got that right. I'm excited.
Yeah.
And
Yes.
she's been in lending for quite some time. And she wants to share with us about that Hometown Hero program, as well as some other down payment assistance programs that is available to all Florida homeowners, or home seekers, I should say, home seekers.
Yeah, and
So
what's fantastic is a lot of these programs, you get the initial blurb, the PR release. Oh, this is going to be the bells and whistles of all programs. It's free money for everybody. But there's so much behind it that what we want to do is delve into it. And there's no better person to ask than somebody who's been in it for years dealing with down payment assistance.
Yeah. So Kathie, without further ado, we want you to give us the Cliff Note version.
Yes. What is the Hometown Hero program?
Okay, well, good morning, everyone. My name is Kathie Mewhorter. I'm with Supreme Lending. And basically this Hometown Heroes program just came out June 1st of this year, in addition to several other programs that are offered by Florida eHousing, which is a state program. I am certified and licensed through the state, got my certification, taken all of the courses. And what the Hometown Heroes is basically a wide variety of occupations that covers everything from policemen, firemen, nurses, CNAs, physical
Teachers.
therapists, a wide variety. There's about 50 different positions. And the unique part of this particular product is not only do they waive some of the initial closing costs for most of these programs, they do charge, a point as a fee. They also, on all of the eHousing products, they waive a lot of the state doc stamps and intangible taxes, things like that. So what this product does is it gives the buyer it gives them 5% of down payment up to $25,000 in a deferred second mortgage at 0%. No monthly payment.
0%?
0% interest rate. So how that works is, for instance, you have someone buying a $400,000 home. It's going to give them a $20,000 5% down payment. Mm-hmm. And as you know, that will be with the home, 0%, no monthly payment. It's deferred, which means if they ever refinance or sell the home down the road, the state takes that back. Interest-free. So if you borrow $20,000 and you sell the house 20 years later, they get their $20,000 back, period. It gets added onto the payoff of the first mortgage. And to qualify for these programs, for any of the eHousing programs, it's a minimum of a 640 middle credit score for all borrowers. You have to be a first-time homeowner. That's a thing. So if it's husband and wife that are newly married, and the husband owned a home 2 years ago and sold before they got married. Well, now he is not a first-time home buyer because he's owned a home in the last 3 years. He could not be on the loan. That's the only thing about these products. All of the eHousing products are like this. The only exception is if you're a veteran, if you're active military or a veteran, that first-time home buyer part is waived. So you could have a buyer who, is active military and say they're a nurse in the military, and they want to buy a home. Well, now they'll get the 5% down. They don't have to be a first-time home buyer. They could have owned a home. They could be selling their existing home. They can also get that. So it's so they do really, they take it to heart for the veterans also.
Now, Kathie, just to interject there. So both people who are on the loan have to be first-time home buyers. Is that correct? And
Yes.
if that's the case, is it able to be run under just the one person who's the first-time home buyer rather than everyone who's occupying?
Correct. So for instance, for this particular product, if, one of them, is not a first-time home buyer, they can stay off the loan, and we would just qualify them under the wife's income or husband's income, vice versa. And just, the only problem with that, though, it's going to affect the amount of home they can buy depending on what the income is of the person that we can't have on the loan.
Absolutely.
Now, in the event that someone, does not, doesn't qualify for one of these first-time, hometown heroes, Florida eHousing has a wide variety of products. I mean, still all of them have the 640 middle credit score. Like I said, they've got their bond programs. They've got like the hometown heroes, several different, not only is it's Fannie Mae, FHA, USDA, and VA. So it offers all the different products. So depending on, which way we have to go, that's the product that we put them in and the interest rate. Now, second to that, so say for instance, a realtor or Cheryl's, Crystal, I'm sorry, since, I have a buyer and I pre-approve them and they don't qualify for this particular product because their credit scores are not 640. I have another down payment product, which is strictly FHA, that only has a 600 minimum credit score.
Oh, wow.
Yes.
Yeah,
and this particular product, like I said, it's strictly FHA. Like it's a 600 credit score. And this one has also several different programs in that range where if they are less than, so say I get a buyer and, it's husband and wife or just, one of them, and they make $80,000 a year. Well, that is less than 115% of the AMI for 2022, which is $80,100. So I could actually get them to 3.5% as a forgivable second mortgage. That as long as they stay in the home for 3 years and make on-time payments, that money, the 3.5 goes away. It's invisible.
Oh, so
Which is
they can
fantastic.
get the forgiven. Yeah. They can get the money forgiven.
Yes.
And that seems that. Oh, I'm sorry. And that seems the difference between the Hometown Hero program and some of these other programs is the forgivable second.
Correct. Now, let me just say, eHousing does have a few products that they do have a forgivable second. But right now, a lot of those products, because of the rates, they cut them off. Because think about it, if you're, they're giving you the money and it is forgivable and it's a 5-year deferred, the rates are kind of very high with this market right now. So those, if we go on there and there's no rates posted, we can't even offer that product. And lately there's been no rates posted for that particular product. So it's just the bond product and the Hometown Heroes, which are still great products, and it covers all of them. Even like I said, it covers USDA, which is even better. So if you have a buyer coming in and they qualify for USDA through eHousing, and so now you have 0% down payment, and I can get them either through the Hometown Heroes or the bond program, which gives them 10%. I'm sorry, not 10%, $10,000 flat. That covers everything. So you can have a buyer literally move into a house using USDA financing through eHousing and have zero money out of pocket.
Now, Kathie, I just had a few quick questions I would love for us to touch on for our listeners. So income limits. So I noticed you mentioned AMI, which is the average median income for everyone listening out there. So what kind of income limits and what kind of housing limits? So it doesn't seem like this is going to be, you could buy $1 million house and still get 5% down up to 25,000, and you can't make over a certain amount of income. So it's not just, this program is tailored one for our the people who are giving back to the community, but they have to fit certain parameters in order for it to work. And can we delve into that a bit of what kind of like an average, where you want to be on the median income scale, and what kind of max purchase price or loan amount could somebody qualify for, like in an ideal scenario?
Well, basically, they do have max purchase price. Okay. So, but they also have maximum income. So it kind of goes hand in hand with that. So your average person, for a lot of these products, the maximum income, I think it's right at like $82,900 a year. So right around 80,000, say $82,000 household income. That's 1 to 2 persons. And for these particular products. Now, the Hometown Heroes has a much higher level, up to $124,000, because you figure if you're a physician, if you're a registered nurse, if you're a fireman, so they lifted those higher. So that particular product has much higher. So you could actually go as much as almost a $500,000 home with the Hometown Heroes, versus in your standard products, you're probably about 400,000, depending with the maximum income of, say, just round up to 83,000, the 12-month average. And also with the Hometown Heroes or any of the housing, your maximum debt to income is 50% back end. It caps you at 50. Even with FHA, it's going to cap you at 50. And you have to have a 680 or higher credit score to get that 50. Otherwise, it's 45%. So that's where, with the Hometown Heroes, though, versus with the other product I told you about, which is strictly FHA, that one does not have any limit. That one does go to 55, or 55.9 for FHA, or 56 if you can get, you can get it, as long as we get it approved eligible. And that can be with as low as a 600 credit score for that one. So it's just, like I said, it's like I've got a few right now. Actually, Crystal and I have one right now with a $410,000 purchase for a girl who's a registered nurse with Hometown Heroes. And she was referred to me. She came, she was talking to, she had been pre-approved with a different lender, and they were telling her she was going to have to bring about $54,000 to closing. And she was like, oh my gosh, I don't know what I'm going to do. Literally, she's bringing $10,000 to closing. She's bringing her closing costs. I got her the full down payment, everything, and she just tickled silly. So I told her, I said, now you have $44,000 left in savings for a rainy day, and to buy whatever you want to buy for that house. So that's why these programs are just fantastic. And the rates for the Hometown Heroes are lower than your standard conventional or FHA or USDA than it would be if someone came to, James, and they just wanted to do a conventional with 20% down. This particular product has even lower rates. So
what's the rate? What's the average rate for Hometown Heroes?
Hometown Heroes right now is at 6.125.
Okay.
For conventional. For FHA, it's at 5.25. And that would also be for VA and USDA at 5.25 for the
5.25
program.
Okay.
Fantastic. Now, Kathie, in regards to closing timeframes, how long does it take? Because I remember back in the day when we used to do down payment assistance programs. So I remember the closing timeframes were a lot longer than a traditional loan. And then also we were encountering stuff where the county would run out of money. Is that still the case now, or have they fine-tuned the process, like sped it up, and now they've got more funds? Because I remember they used to say they had $5 million in reserves, but they would only allow a certain amount to go out towards down payment assistance, and so a lot less people, a lot of people were left in the lurch during this. Have they kind of ironed all that out? Like, is it more of a desirable product for people? Are sellers willing to wait as long? I guess in this market, I mean, Crystal, the market's kind of shifted where sellers might be more apt to wait if the turn times are still longer.
In this particular, well, right now, the Hometown Heroes and the other FHA product, they're underwritten by us in-house. So they do not go anywhere. They don't go to the county. They don't go to the state. We have certified underwriters for these products. We fund them at closing, and they are 30 days or less. The loan I have right now with Crystal, I'm waiting on, I think, one thing. We already have the appraisal, and it's back in for clear to close. So we'll probably be clear to close the beginning of next week, and her closing date is August 15th. So there's going to be about 3-week turn time. So there is no, to answer your question, there is no second set of eyes underwriting these. I agree with you. Back in the day, I did some of the county programs, and it was a nightmare. I mean, we would approve them, and all of a sudden they go off to the county and they're locked. What happened to the file, where they
Yep.
are. The rate locks expired, and then it comes back denied for some crazy reason. They don't like the house, they don't like the property. That doesn't
Yep.
happen. That's why we only delve in these products, because we underwrite them in-house. We review the appraisal, we do everything. I lock them. And they're just easy peasy products.
Which is fantastic, because anytime you could do something in-house, it works better for the borrower, works better for you guys. But you're right, as soon as you send it out, then you're just waiting in limbo, and then everybody's frustrated, and it's like,
Correct.
well, where's my file at? It's like, well, we're waiting in line, so I'm glad to hear that it's kind of fine-tuned, especially when you're doing it in-house. And that's the big thing, is
unlimited funds, to answer your question, because you were asking. There's unlimited funds. So it's not like, okay, and even like, with USDA, they usually renew their funds in October. So this time of year with USDA gets a little eerie, because you don't know if they have funds left, or, how long you have to wait for the funds. Unlimited funds. The e-housing products are all through US Bank, who is basically the final where it goes off to. And the other program is through Chenoa. So they also have unlimited funds. So that's a nice thing. So when I offer someone a product, or if I pre-approve them now, my pre-approval is good for 90 days. If they find a house in 2 months, I don't have to worry and go back to them and say, guess what? There's no more money left in the program, because it's unlimited funds.
Okay.
Which is
so
fantastic.
for someone who is a nurse or a doctor or anything like that, and the three big things they need to worry about is their credit score, obviously, right?
Right, 640 middle.
And what would be the other things, just for in layman terms? Because I think some people might have gotten lost in this process. Because one thing I always try to be mindful of is, we live in this space of loan and real estate and mortgages and stuff like that. But for someone who's listened to the podcast, they want to know the basic. They never bought a house before, because this is a first time home buyer, situation. The biggest things you would recommend if they're trying to prepare to get ready to buy their first home?
That's a great question. It's like and this is kind of straight across the board, and James would agree too on this. I mean, for anyone preparing to buy a house that has that thought in their head and they get pre-approved, first thing is, I don't care if you're going to, just keep your credit card balances low, which means your credit scores are going to go high. Leave it that way. Keep all the money that you do have in one bank account. If you have any collection accounts, now not so much medical, because medical they kind of ignore, but the problem is people don't understand this. It's still, if you have perfect credit, and all of a sudden you have this bill that you just ignored and you hope it goes away, and it's a $75 medical bill, guess what? That hits your credit. It's going to ding your score probably up to 75 points. So now your 700 borrowers is 625, and they're freaking out and they don't know why. And it's like, well, did you owe Quest Diagnostics $75 and you never paid them? So I always tell them, keep everything straight, avoid the credit cards. I don't care if you go into Kohl's, and I tell people all the time, I said, I don't care if it's Christmas and you go in there and they say, oh, if you open this card, we'll give you an extra 40% off today. Don't do it, because now you did another inquiry. It's just going to ding you up. Same thing. So it's just pretty much that. And then during the process, just something real quick, I'll tell you. And I always tell my buyers, because through when I do loans, my borrowers get these videos through the stages, and it'll keep reminding them, don't open any new credit, don't move money around, because some people be like, oh, I'm going to flip it here or there. But then you're just going to give me bank statements of where all that money went and, where it ended up. But I'll give you, for instance, I had a borrower last month, and because I also my buyers right before closing, about a week before closing, we're going to repo your credit. So just because we pulled your credit and you think like, okay, I'm good. She went out and bought a $950 a month BMW.
Wow.
$950?
$950 a month. And 4 days before closing, I'm getting this email from my processor, and I'm like, you got to be kidding me. So I called her and I said, well, I just saw all these inquiries from a car dealership. And I said, please tell me you walked away. Oh no, I said, well, I hope it's big enough to live in. because you just threw yourself from not, she literally had
Yes.
to bring the vehicle back, bring it back. And her uncle put it in his name for her and she paid off the loan. And this
Wow.
was scrambling. Right. Cause I'm like, okay, you're at 70% back end.
Yeah.
Wow.
The house.
And
And hopefully you haven't had that happen, James, but you know,
Oh,
hear
yeah,
great
yeah.
stories about it. Or
It's
they quit
funny.
their job. You know?
Kathy, it's so true, because that stuff happens all the time. No matter how many times you warn them,
Yep.
somebody gets some great deal and then they jump on it. You know, it's
You
a
think we
limited
won't
time
find
deal.
out.
Go do. Yeah, we do. And that's the thing. I think borrowers don't understand is as soon as you're in the mortgage process, you're under credit monitoring from the day you start until the
Yeah.
day of closing. And so if
Mhm.
they see any fluctuations, any new pulls, we know about. There's nothing you could like hide under a rug.
Yeah.
We're going to figure it out because we're loaning money to you to purchase a home. And so we want you to be honest with us and responsible. But surprisingly, after closing, I mean, they're done credit monitoring. She could have got that car if she just waited a week and just
Well,
done it on her own.
you know, after the
Yeah.
fact, but I know for my sake, if the file
Yeah.
is audited, I did the right thing. You know,
Yes.
maybe she easily could have said, no, I didn't buy a car, you know,
Oh,
but she
correct.
told me she did. And I'm not, you know, I'm very honest in what I do, is why I've been doing this for 24 years. I mean,
Same. Yeah.
I'm not going to lose a career over someone's not listening.
Yeah.
No.
You know, and the same
Not
thing,
at all.
because I instill it in my buyers so much, I'm sure you do too, that because sometimes I feel bad. I have buyers say they're closing next week and they'll call me, is it okay if I let progress at or, you know, Duke Energy pull my credit to turn my power on? I'm like, yes, you're good now. You can have, because like you instill in them that fear, because it's true. I'm like, they're going to check your credit. And if all of a sudden you went to Ashley Furniture and now you have a $30,000 line of credit going, you know.
It's absurd. You know, the worst thing that happened to one of my borrowers, fully qualified. We cleared the file 2 weeks before closing. He wanted to close early. The seller didn't. A couple of days before closing, his whole department got downsized. And so he lost his job, and they're going to do verifications of employment, you know, up until the day of closing. So like you mentioned before, people who are quitting their jobs, which was back in the day, they used to get a second job and then quit it right before. It's like, no, when you get a loan, they're basing it on everything that you have and that you're going to continue to have, that you have a good faith intent, just the same way we're going to loan in good faith to you. Now, Kathie, just to curve back, now, what does a borrower need to bring as part of these programs? So it covers the down payment. Do they have to bring anything towards closing costs? Do they have to bring $1,000 minimum? Because I remember the big thing before the market crash was there was 100% financing. Everybody was getting into a home. And then it turned into, after the crash, we need skin in the game. Now, for these products, does a borrower need to have money in the bank for reserves or bring money down to show that they've got a skin in the game, so to speak?
Right. Okay. Good question. It's the same underwriting guidelines across the board as it would be for a standard FHA, Fannie, Freddie, VA, USDA. So I will tell you though, most borrowers, unless you have a credit score of at least 700 with the e-housing program, and so say you have a borrower with 700, they have just enough money in the bank for the closing cost. They have $10,000 and their closing costs are going to be $9,000. So there's no reserves. Credit scores are, 680. I'm not going to get an approval running at Fannie. But in this market too, you probably know that person probably is not going to get approved eligible for Fannie. And if it's not a down payment loan, that's when we flip them to FHA. So I flip them in the same thing for Hometown Heroes. I can flip them to FHA and still get an approval and then get an approval. But as far as that, they don't have to have, reserves. It's just whatever DU says. And we run it through DU as a community second, link the two loans together. And I've had people that have had literally because if they're getting the, okay, here's another. So if they're getting the down payment from, the two products, from either e-housing or Chenoa, they may not even have the money for closing costs. They're getting that from mom and dad, grandma, grandpa. Those are all gift funds. Still allowed and getting approved eligible.
Okay, perfect. So And that's a big thing. So people know is it's not going back to a full 100% financing. You're getting into a home with no money out of pocket. There's still going to be some costs that you're going to have to cover, that the fund and, the program is not going to take care of. So you want to
That's
make sure you have money
That's a good
in
point.
pocket,
Yeah.
or access to it.
I usually tell borrowers with these different products, and gift funds can count for this. Have at least $2,000 put aside, because you're going to need at least $1,000 for the contract deposit. Because these are things that if the loan falls apart, that because this down payment money, you're not going to get it until the day you close. So
Right.
you have to have this up front, which would be $1,000. Down payment, Crystal, which sometimes now they even want more depending on.
Yeah, depending on the offer. So I just want to preface, on a $400,000 home, a lot of people want 10% is always a good idea. The better you make your offer look with a deposit down of more than 1,000, the better you look compared to other people in the market.
Right.
That's also buying a home. So I usually tell the borrowers to at least have 8,000 or 10,000, just because you have to pay for inspections.
Right.
You have to pay, inspection, a 4-point and a wind mitigation inspection, and those costs. And sometimes you want to pay for your appraisal, prior to closing.
Yeah.
And these kind of things is important.
Yes, because the appraisal, of course, will be upfront. Because if that loan doesn't close, the appraiser wants to get paid. So the appraisal, the home inspection, and the contract deposit are all upfront money the borrower does have to have. And then the remaining will kick in at closing. Then the down payment funds will be all deducted from that.
Yeah.
Which is perfect. And just to clarify, all these programs are only for primary homeowners. So if you're looking to purchase this as an investment or anything else, you're not going to get, you're not going to qualify for any of these programs. Is that correct? Safe to say? So primary homeowner means you have to live in the home as your main home. It can't be a vacation home, can't be an investment. Because this program is best catered to help potential homeowners achieve the dream of homeownership in Florida.
Yes, you're absolutely correct. This is only for primary residents, and the majority of these products are for first-time home buyers. Though I do have a product for, like I said, the other one, which you do not have to be a first-time home buyer, and one of them doesn't even have income limits. So it's kind of like one of those things. If you have a borrower and they want to buy a house, but they don't have the money for the down payment and the closing costs or one or the other, I can get them into a product where I can get them to the closing table.
That's awesome, Kathie. Well, you know what? I am so delighted that you came. I see our time is kind of ticking down, and it seemed like we might need to have you come back on just to kind of give us some more information about the other programs, because it's just so much information out there and so much you don't know until you don't know,
Yeah,
and true. It's a nice thing because this month alone, I've 50% of my pipeline that I'm closing is down payment assistance. And a lot of people, they feel fine. They're like, I don't want to tell anybody. And well, here's the other thing too, on my pre-approvals, I don't have to put that they're getting down payment assistance, which is nice. Because Crystal, if you submitted an offer letter with a contract and says this person, the seller's going to be like, because they hear down payment assistance, they think bad credit, no money, which is the total opposite, because you really, with this one, you have to have a 640 credit score.
Right. Which is good.
But the other product I have goes down to 600, and your standard FHA, you can go down to 580. And I think there's some companies even go lower than that. So, and it's something because it's not through an outside source. I don't have to disclose that, hey, it's through the county or this, because it's all in-house, which is nice.
Excellent.
And I think that helps the stigma of down payment assistance, where it's not like how it used to be.
Correct.
This is actually in-house. It's more stringent to qualify for. So it's not as scary of, it actually probably makes the borrower stronger, especially when they got a bank in the back or her government program willing to loan them enough money to get this to closing. But Kathie, you've been so generous with your time, and Crystal and I, we always appreciate it. Thank you for just removing the veil, revealing the wizard on down payment assistance. Now we kind of see behind the curtain. I think it's going to help out a lot of potential home buyers or people with questions. I mean, when we post this, anyone who has any questions, just field them and we'll get you in touch with Kathie. Kathie, how can we get in touch with you if somebody has questions about down payment assistance? What's the best way to reach you?
Best way to reach me, my direct number, which is 407-920-5383. Call or text me 7 days a week. Crystal can vouch for that. And I
Yes, she does answer her text and she does answer her phone. And if she doesn't, she will definitely call you back. She's awesome for that. And I mean, there's a number of people, I'm sure, because we are in a money, a tight money situation with a lot of people who still want to be homeowners. This would be a great time to, make a plan in place to become a first-time homeowner in the next 6 to 8 months. It's possible if you make a plan to do it. And I'm sure Kathie would be able to help you in your down payment assistance needs.
I would be my pleasure. Get you into a home.
Absolutely.
Mhm.
So thank you again, Kathie. And thank you,
you.
James. And if you are looking to buy a home, we have a good group of people that be able to help you. Don't you think, James?
Oh yeah, always. I think it's
Yeah.
fantastic,
And so, and delighted to be able to share knowledge. And if you know somebody that's buying or selling a home, we would love the opportunity to help you in the process.
Very much so.
Perfect. Yeah. So we'll catch you on the next one, guys. Thank you again for all your time.
All right. Thanks. Have a good day.
Thank you. Take care.
Bye-bye.
Bye-bye.